Good morning or good day, everyone. Welcome to today's class where we are going to discuss double return principle. And last class we discussed about accounting equation, where we tell ourselves that for us to understand deeply, for us to know more about accounting, we should start from the basic element of accounting, which is accounting equation and all other topics that will be coming on. Now, today we want to talk and discuss about double entry principle. So let's start. Double entry principle is part of the accounting part of the accounting basics that we should understand very well. If you are a business owner, if you are a student, O-level student that is preparing to write O-level examinations, if you are preparing to write your JAMB, if you are preparing to study accounting, these are the basic things you should know. These are the basic things you are going to be taught in school. These are what will come out in your exam. These are what you should know as a business owner. You should know how to record your transaction daily if you are a small business owner, where you don't have the ability to employ an accountant or a bookkeeper or a clerk or a cashier, right? So now, double entry principle is a principle that guides the preparation of accounting. Yes, once again, this is a principle that guides the preparation of accounting. You will see that if you buy something, they will credit it, or if you do something, they will debit it. You receive debit alert from bank. Your accountant or your teacher will say credit this thing. There is a principle that guides those things, and the principle is known as double entry principle. That is it. That is the meaning of the principle. Double entry principle is a principle that guides the preparation of accounting. Again, let's say double entry principle is a principle or rule that guides the preparation of accounting, transactions. Yeah, let me change this thing to our normal default. Yeah, so that is it. That is the purpose of this accounting double entry principle. It's a principle that guides the preparation of accounting. So what is the principle itself? What does the principle say? The principle says that for every debit entry, there must be a corresponding credit entry. There must be a corresponding credit entry. For every debit entry, there must be a corresponding credit entry, and vice versa. As simple as this, you should understand this very well. For every debit entry, there must be a corresponding credit entry. What this is trying to tell us that whenever you have a transaction, that is every transactions are dual transactions. Let's say are dual entries. That means you will enter them 2 times. Every transaction, they will be recorded in 2 places. That is meaning of the principle. That is, if you debit a transaction now, you have to credit the same transaction. If you credit a transaction now, you have to debit a transaction. For example, now, Ade bought a car at 500,000 naira. Ade bought a car at the rate of 500,000 naira. Ade bought a car, right? Is just a statement that can be recorded in 2 ways. Ade bought a car. Bought means purchase in accounting. We are still going later on. We still go there to explain all these terminologies. Purchase, right? Ade bought a car. That car that Ade bought is known as purchase. You can either record car account or purchase account and cash account. Let me make it simple. Let's say car account and cash account. The money that Ade gives out, which is the cash, will be credited. Do you understand? The money that Ade gives out, which is 500,000 naira, is the cash that will be credited. And the car that Ade received back, that was 500,000 naira, will be debited. It will be debited. You see, the transaction appear 2 places, 2 times. You debit the cash, you debit the car, you credit the cash. That's how it does. Again, this means you debit the receiver, and credit the giver. Yes, you debit the receiver, the person that received something, or the something that you receive, you will debit it. And the giver, you will credit the giver, the goods or anything that you give, you will credit it, or the person that you give, will credit it. Do you understand what I'm saying? Like, what I'm trying to say is that from the illustration I gave you, Ade bought what? Ade bought a car at the rate of 500,000 naira. Ade that purchased that car, right, is who? Is a giver. He give out 500,000 naira cash. That's why that cash will be in credit side. You will record that cash. In that cash is a credit balance. You will record it in a credit side, 500,000 naira. And he received what in return? Car. And the car will be debited. That's why we debit the car. The car will be debited, while the cash will be credited. So that is the double entry principle. You will, for every debit entry, there must be a corresponding credit entry, and vice versa. And debit the receiver, credit the giver. Debit the receiver, credit the givers. And also, we have an acronyms. We have an acronyms that we used to use. We call it PES2 peers. Yes, peers. Peers is an acronym that we use sometimes to understand this principle, where P equal to purchase, P equal to purchase, we have E, which is equal to expenses. We have A, which is equal to assets. We have R, which is equal to, We have R, which is revenue. Revenue. Which is revenue. We have we have L. We have L, which is liability. Liability. We have S, which is sales. Which is sales. So this now, they are all these. They are tools that make us to understand more about accounting entry. You see this? Let me start from here. All these will be in debit side. All this will be in debit side, while all this will be in credit side. While all this will be in credit side, yes. All what we have here will be in debit side, while what we have here will be in credit side. That is what we have in our green: purchase, expenses, and assets. All these will be in debit side. Wherever we have purchases, purchases will be in debit side. Wherever we have expenses, expenses will be in debit side. Wherever we have asset, asset will be in debit side. Wherever we have revenue, revenue will be in credit side. Wherever we have liability, liability will be in credit side. Wherever we have sales, sales will be in credit side. Let me explain again. Whenever you buy something, you will debit what you bought. What that particular item that you buy, you will debit it. Whenever you spend money on something, right, that amount of money you spent on something will be debited. Whenever you purchase an asset or you increase your asset, that amount of the asset that you just incurred or that you just acquired will be debited, right? Whenever you incurred revenue, you earn a revenue. Whenever you have a revenue, that revenue will be credited, right? Will be credited. Whenever you have a liability, you owe someone money, that amount of money will be credited. Wherever you sell goods, that particular goods that you sold out will be credited. So simple as that. So let's take some examples so that we can understand what we are saying. Don't forget, you debit the receivers and credit the givers. So examples. Examples. Example number one. Example number one. ABC Ventures is established with 5 million naira contributed by the owner. Contributed by the owner. Let's look at it very well. If you contribute amount of money into a business, firstly, what you're supposed to do, the first thing that you should do is to understand the question. After understanding the question, you have to know and think about what are the accounts that this transaction affected. As simple as this. If you see contribution, it contributes money to start a business, it used certain amount of money to start a business. That amount of money used to start a business is known as capital. As capital, right? That's the first thing you should know. It uses ABC Limited uses 5 million naira to start a business. right? And that is known as capital. What other things this affects? Now, it affects what? It affects cash. It affects cash. He uses cash to start what? To start the business. Remove cash from his pocket and use it to start a business. Do you understand now? So that is what is known as that is another account that you should consider. Yes. So these are the two accounts. Which one to be debited? Which one to be credited? That's another question. Which one is giving out? Which one is receiving? ABC Limited is the one you are preparing into account. As a business entity, ABC is a business, right? So if which one is to be credited and which one is to be debited? ABC receives what? ABC receives cash, right, from its owner. ABC receives cash. That's why we have that is why our cash will be debited. Our cash will be debited with how much? Our cash will be debited with how much? With 5 million naira. With 5 million naira. Why our capital will be credited with the same amount, with 5 million naira. Please, let's try to understand this very well. We have to know who is preparing. One of the things that you should know is that who is preparing this account. ABC Venture is the one preparing the account, right? Is the one preparing the account. If the owner of the business is the one preparing the account, the accounting entry will be different from this, right? But this man, this business is the one that's preparing the account. That makes it to be what? To be different. So ABC Venture established ABC Ventures is established with 5 million naira contributed by the owner. So ABC Venture account, you can say, okay, sorry, let me do it like this. ABC Ventures account. Yes, I think you understand this. So then it will be like this. You debit the cash because the ABC Venture received the money, right? And I told you that receiver, if you receive, you will debit. If you give out, you will credit. You receive the cash of 5 million naira and use it to start a business. And you give it out again, maybe to buy goods, to start a business, which is the capital of 5 million naira. So that's that for this example. Let's continue. If you have any question, don't hesitate to send your comment, to reply to the reply in the comment section so that I can see your question and answer it. And don't forget, if you have any topic in mind that you think it is somehow difficult or that you don't understand and you want me to tweet to explain, just write the topic down to the comment section. In my next class, I'll be able to talk about it so that we can all understand the principles of accounting generally. Now, another example says that ABC Ventures purchases office furniture for 800,000 naira and pays immediately by bank transfer. Now, who prepared the account? Another thing we should know. Who is preparing this account? ABC Venture, right? What are the accounts that is affected? You know, this is purchase, right? You can say, okay, purchases account, right? Or you can say office furniture account. You can say office furniture account. You can use either of the two. But some people will tell you that once the name of the asset is mentioned, it should be the name of the asset. That the account should be the name of the asset, but you can use any of the two, right? And another account that you should prepare, that you should consider thinking of, is what? Your bank account. Your bank account. We should write account here too. Account. So is your bank account. After that, which one to be credited and which one to be debited? Which one to be credited, which one to be debited? Which one is receiving, which one is giving? ABC purchases office furniture. Office furniture is an asset, and I told you that asset should be debited. That's another clue. Another thing is that I said receivable. If you receive something, it should be debited. You receive office furniture. Maybe, for example, now, if you have office furniture, if you have 5 office furniture before, and you buy another one, it will be 6. That means it increases. You receive office furniture. That makes your office furniture account to be debited. With how much? With 800,000 naira. With 800,000 naira. And now, the bank you paid through bank transfer. That means your account, the amount of money you have in your account will reduce. You give out the money from your account to buy office furniture. So that means your bank will be what? Will be credited. Your bank will credit with how much? 800,000 naira. Please, do you understand this now? Firstly, understand, you have to know which or who is preparing this account. In this example, ABC Ventures is preparing this account. What are the two accounts that will be affected? Purchases account or office furniture account, and the bank account. Your furniture account is receiving, that is why we debit it, and your furniture account is also an asset, and all assets will be debited. Also, your bank is reducing, that's why we credit your bank account, and you paid for the furniture through your bank account. You give out. That's the reason why we are crediting it. Don't forget, for every debit entry, there must be a corresponding credit entry. For every credit entry, there must be a corresponding debit entry. Debit the receiver, credit the giver. Bank is the giver. That's the reason why we credit bank. Right? So, let's continue. Another example. I think this should be the last example for us today because of time. ABC Ventures purchases inventory worth 1,200,000 naira from XYZ suppliers on credit. Who owns this account? Who is preparing the account? ABC Venture, right? ABC Ventures account. ABC Venture account. What are the two accounts that will be affected? We have inventory account. We have inventory account. Inventory also known as goods. Inventory account. And what? XYZ account. XYZ is the name of the supplier, right? It's a company on its own, and you have to record it. And if you can say XYZ account or trade payables, trade payable account, it's still the same thing. Trade payables account. So we can either say, because you purchased this on credit, you have not paid. That makes you to be a creditor. Yeah, you are still owing. Trade payable means creditor. You owe A, B, Z, Y, Z. You can say, as likewise as I said, you can say that XYZ account, which is or you can say trade payable account. After you know this two, who is to be debited, who is to be credited. Number one, inventory is an asset. Inventory means goods. It is an asset, right? Trade payable is a creditor, means it is a liability. Liability will be credited, asset will be debited. That is another that is one aspect you should look at it. Another aspect you can also look at it is that who is receiving, who is giving out. Is XYZ receiving or giving out? Is ABC receiving or giving out? If ABC is receiving, that means ABC receive what? Receive inventory, which will be debited, right? XYZ give out what? Give out the inventory and credit, which is the trade payables or XYZ account. Do you understand? So that's why we have trade. We are to debit inventory account and credit what? And credit XYZ account with how much? With 1,200,000 naira. 1,200,000 naira. With 1,200,000 naira. So this will be the end of the class today, where we discuss about double entry principle. And on our next class, we are going to discuss more on this double entry and solve more questions on it. Don't forget to follow, like, comment, and share this particular video so that it can reach those people that are in need. Our junior ones that are in commercial class, our junior ones that are preparing to write their JAMB exams, our junior ones that are in higher institution that want to study accounting, or that are in that are still an undergraduate trying to get through the undergraduate process, and those people that are in that are preparing to write ICAN exams, right? Maybe they are in ATS 1, 2, 3, or maybe they are in foundation. They want to write skill. This basic principle will be very, very useful for them. Don't forget to like and share. Thank you very much.